that Trump is looking at start signing an executive order to really get the uranium sector over there firing. And we know that the RBA kept rates lower than they should have during the inflationary times.
As you know, well, you were there, Woods. Our publisher, Woody, actually fought in a boxing bout last week. We went along to watch him have a crack. He's in ripping form, six-pack. He didn't drink for weeks. He only ate eggs and meat or something. And he... Hello and welcome to this week's Closing Bell. We have a very big show this week. We've been some big news in the market, so we have lots coming up. As usual, I'm joined by Murray Dawes. I'm Callum Newman, so it's AKA the Callum Murray Traders Muzz. And we're going to be talking about, one, uranium. Trump's come out with a big call on this sector. We're seeing a big rally in uranium stocks today. You've covered this market for a long time. You'll check in on the S&P 500. I'm going to talk a little bit about real estate and the RBA and what's going on there. Then we'll throw to Belvedere's Inbox, our new segment from last week, which is very popular, and one key theme coming through that one, which was what's going on with oil. So, Murray.
Excellent. Let's get stuck in.
Let's go. Should we start with the S&P 500 quickly?
Let's do it. Now, I have had the idea recently saying that this rally is probably going to peter out. It's been pretty difficult when the market's got hammered 15% or so and then has turned and gone vertical. With all the things going on with Trump. So it's a pretty tough situation right now where it's just rallied day after day after day and it's right up near the all-time highs. And I'm even getting nervous of my call. So I've been watching really closely what's been going on this last week. And I want to show you what's sort of happened in this really key zone, which is making me think, oh, maybe I'm on the right track here. So let's jump to the charts and have a quick look. So here is your sell-off from the all-time high. There's the massive swing to the downside, everyone panicking there at the end. So I'm looking at that whole correction and considering what comes after that. So when I look at these corrections, this is sort of how sell-offs evolve, I guess. Well, the theory I'm looking at is if we're looking at a downtrend, and prices are heading down, and we know what a downtrend is lower highs and lower lows. And what we've discovered with these downtrends is you can look at the wave and there is a relationship between the size of the bounce in the wave, how far up it goes, related to that actual wave. So the key area that I've discovered where there's often pretty high probability of reversals in that area, which then can see a move back to the midpoint. So the midpoint of that whole range coming in around here, around 5,500 on the S&P. And S&P currently at 5,800. So even that's about nearly a 400 point fall if it does happen, because this is such a big wave that we've been in. So I've been watching this closely. And you can see, this is a daily chart, so I'm looking at very short term for you here. And you can see that the daily trend is up. So it's still, really strong buying pressure that we've seen. It's rallied from, 4,800 to 5,000 to 6,000. So a 1,200 point rally in a really rapid succession. So that's why I'm so interested in this area, this 75 to 87.5% retracement going, look, if it does turn back down from here, you're bringing in the prospect of something like this. Rally up into the sell zone and then even the next wave down. So if you're looking for a risk-reward point where you'd either lower risk and sell what you've got, if you were panicking a month ago, or if you're wanting to short the market and thinking, look, I think markets are going to turn down, your best risk-reward point to actually put on a position is up here, where it is up in this sell zone. If you get the correct reversal signal from there, you've now got great risk reward on the trade because...
Are you talking about shorting the market?
Yeah, if you're shorting the market. So if it does actually turn down from here, where's your target? It's the midpoint. Even that target is 400 points away. And really, if it goes back above that all-time high, I'd be pretty happy to say that I'm wrong. And even if it does just turn up and keep trending higher, you could have a stop loss much closer. So you're looking at a very good risk reward. If you're getting short once you get the signal, your initial target is a long way down, but also what if this is the beginning of the next leg down? Just imagine your upside. You're talking about a risk reward that could be 10 to 1 in a situation like this. So it's a quite exciting point. So what you can see here, here's that top of the sell zone. Price has got 7 points from that. This is what I wrote during the week. I said, watch out here. This is now decision time. I said it was, the moment of truth for the market. I wrote that on the other day. And then that night we had a 100-point fall. So we've got the first signs of this sell-off occurring. Now this is just daily, but we've got the daily sell pivot in place. Now momentum's still up. We've still got the daily uptrend. And this is where if this daily trend turns down, I'll get pretty excited, because when you look at the weekly is actually still negative, right? So we've still got a weekly downtrend in place. So this is where we're stepping out a bit further. We're saying, right, we've had this big sell-off. It's still in weekly downtrend. We've just hit the top of the sell zone. Now what I want you to imagine next week we actually have a bad week. Bonds are selling off. Things are getting a bit tricky there on the bond situation. Now just imagine what it looks like if we have a bad week next week that sets up returning below those moving averages. It's still in a weekly downtrend. It's just tested the sell zone. The selling pressure has come in. It'll still do a bit of work, but that is setting up the situation for that next leg down. If this is the beginning of a bigger move to the downside, that volatility that we saw. So as far as risk reward, setting yourself up, getting ready, this is now setting itself up really nicely. It's still early days, but I'm now, really looking at this, thinking that this sort of a week or something like that creates a weekly sell pivot and actually sees quite serious selling pressure, that will set up pretty interesting technical signals that could say, get ready for more downside.
Well, it's interesting. I saw the guy that runs GQG Partners say he thinks the investors are too optimistic on the big tech, and he's actually getting out of the US. And I just bring that to attention because he jumped out back before they got slammed in 2022 as well. We also still have 30% tariffs on China. That whole negotiation thing still needs to happen. You alluded to the bond yields now pressuring up, even eclipsing 5%, I think, which is a headwind for stocks. So hard to get bullish, but this little rally thus far is sort of wrong-footed.
Oh, it's a short squeeze, right? This is what happens. When the market moves down, you often have the move back into the sell zone because of the short squeezes, because you have lots of people getting short on the way down, and then when it turns back up, they're panicking out of their positions up here and driving prices higher. And then it's ready for the next leg down. So that's usually how these downtrends move, is that they have really large rallies, and if you can get on that next wave as soon as things turn down, your risk reward is massive and you can actually have some really big wins. But it's also a chance to de-risk if you're concerned about things actually getting out of control.
Well, let's go from that to talk about uranium, because just this week I saw in the paper that the demand for electricity via data centers is becoming a concern for the energy market operator here in Australia. And this ties in with what's going on with uranium. We have this kind of transition that's supposedly happening but not happening at the same time. Then we have this huge demand coming in from AI and what it requires, which has been part of the case for uranium for the last couple of years. Now, as soon as I saw you this morning, you said, well, what happened with uranium stocks, because they were just jumping out of the blocks at the open, and it's down to our man Trump. So can you tell us what's going on there?
Yeah, well, I had to go searching because in the overnight markets on Thursday, all uranium stocks were up about 0.5% or something, nothing exciting. And then our market opened up, and it opened up 7% across the board. And Bannerman up 10% and 10 to 14%, some of these, Deep Yellow, et cetera, et cetera. So I was like, what the hell's going on here? And discovered, as probably people have read by now or seen in the news, that Trump is looking at signing an executive order to really get the uranium sector over there firing. So that's helping land for new projects, helping finance, lowering the restrictions and the hurdles they've got to jump through to get something up and running. So he really wants to get things moving on the uranium front, and he's going to start getting that going. So that's a really big plus. And we know that all around the world things are slowly moving in the right way, apart from in Australia, of course. That's a backwater that will possibly have a crash in the next few years, the way we're going. But you can see that it's starting to tick all the boxes.
Well, the thing with the uranium, right, and this has been part of the bull run, is that it's just been such a dog of a market for so long that if there is that genuine pull on the demand, like there's been no mines built in uranium or...
Yeah, it takes so long. It takes a decade to get something, the permitting, the environmental hurdles you have to jump through now, the financing, it takes years and years and years.
And uranium last peaked in 2007? So it's almost 20 years ago that anyone actually cared about uranium, like in terms of funding projects.
You can count the projects that are coming in the next year or two on your hand.
Funnily enough, I was actually at a thing this week where this gold guy was pitching his project, right? He needs at some point to raise $400 million to get this thing built. And that's not an easy thing to do, to when it doesn't matter who you are or what you've done, to raise like that amount of money. Now he's doing that in a gold market where it's booming and investors will be doing it. Imagine trying to do that like 5 years ago with uranium. Like who's going to give it?
No, everything's mothballed and yeah, no. It's
and so it does lend itself to the idea that if this thing goes, it is going to rip.
Yeah, it'll run really hard. But it's taking time, isn't it? It was running a few years ago, and then everything stopped again, and there was enough supply, and everything sort of died pretty quickly. So it takes a long time for these things to happen, and I think this announcement could get it going. So if we just have a look at the URNM, which is the Australian ETF, covering off all the major uranium producers and people developing around the world. So it's a really good proxy of the whole market, really. You can see again pretty clearly we had the big run a few years ago. Now that stuffing got taken out of that, but when I'm looking at it the way I look at things, here's the whole sort of wave to the upside going into 2024. So we've had a really big correction. You could even see that it's sold off initially down to the buy zone, the area there, and then we've had another sell off just recently that's taken. Look at that. Right perfectly to the bottom of the buy zone there. So
So this is teeing off the uranium spot price, right? This ETF?
No.
But this is the stocks.
No, this is an ETF of all the stocks.
Right.
The major stocks. So you're really getting a sense of what everything's doing. So we've had a massive clear out. So this is how prices move. You have the big rally, everyone gets long. As I've said before, all the retail punters are buying up here, and then they're all dumping it down here in disgust a year later. They've been taken out of their position. And then all of a sudden they look back and it's back at the highs again, and they want to jump off a bridge. So you've had this massive sell-off. It's been really taken it down, made it look really sketchy. But really the overall structure is still, as I've said, an uptrend. Right? So if it does that, it's still an uptrend when you look back in years to come. And if we look at this low here, we've got this month could be the monthly buy pivot on that ETF. Now, I'm also looking at this as an ABC structure, so like a corrective structure like that. So corrective structures like that, what you're saying is that everyone's sort of buying in that area, and this is where their stop losses are, below that area. So they're called an ABC because of this. There's your A, there's your B, and there's C. So there's a big shakeout, and once it turns back above A, that's when you're saying, right, that's the buy signal for the next wave higher. So there's a lot of technical things coming in there saying this looks pretty good, and when you've got Trumpy adding to it, it's sort of you've got everything working towards it.
Well, like with any bull market, especially resources, there's always the question of like, how do you take advantage of it? So most of the stocks in Australia are developers, right? They've got deposits, but they're not producing. So that one, I'm assuming, we have to look at the numbers, has some of the Canadian producers, because they're the ones that are still actually going from years ago kind of thing. So you could use it by ETFs, or you could trade the individual stocks. I remember a few years ago when you had Paladin in your portfolio, and that was a monster.
Yeah, it was a monster, and that's come right back to earth. So maybe that's worth looking at. You got your Bannermans, you got your Deep Yellow,
yeah.
You got the Next Gens, you've got Boss Energy. So there's a handful out there that are coming and looking pretty good. They've also had a big shakeout, and I'm going to be going into one of those pretty soon. So I'm not going to say which one. But
is that
it's looking interesting.
Retirement trader?
Yeah.
Well, there you go. So if you're interested in Uranium, Murray will be carrying off on it for retirement traders. So we should say, for all the fears out there, Bitcoin's booming, uranium rumbling, US stocks have been pressing up.
Gold still powering.
Gold shares are still there's plenty of opportunity out there. All right, you ready for my real estate bit?
Get stuck in.
All right, well, Belvedere will bring up this little article. So I think this is important, and everybody knows that the RBA cut rates and will do more. But I thought this was a very interesting comment from the governor, who's Michelle Bullock. Now, I've got the Larry laptop here to read it to you properly. And she says, this is a direct quote, "If the right thing to do in terms of employment and inflation is to lower interest rates, I think we have to accept what that might imply for housing prices," she said. "The issue for housing supply is supply and demand. If we start thinking about do we lower interest rates because of housing prices, we're going to take our eye off the ball, which is inflation and employment, and I don't think that would be the right thing to do." So the interesting thing for me there is that she's washing her hands of the housing price problem. She says it's a case of supply and demand. Now, I happen to think Mrs. Bullock is talking bulltish there, because the biggest explanatory factor for house prices is the amount of mortgage debt that's created by the banking system, and she would know that perfectly well. We can also see that because back in 2017, APRA clamped down on the interest-only loans at the time, which killed the boom that was going on driven by that at the time as well. So she is giving, and Belvedere will show you also a quote here, a graph rather, of Australia's GDP versus what's going on in the land market. So that is happening because there's so much credit created against real estate. So the interesting thing for me, Muzz, is it seems to me the RBA wants housing prices to go up because that would support the domestic economy. We know Trump's causing all this angst overseas and the debts and all these concerns. The RBA only has so many tricks, can pull down rates, get consumer spending going. We know house prices have the high wealth effect. It flows on to goods and furniture and those cyclical companies, which are beginning to move on the market because the market can see what's going on. Rates come down, those cyclicals are going to move. Would you agree?
Yes, absolutely. I've been looking at that sort of smaller caps and micro caps, wondering whether the lower rates is going to spark something in that speculative space. So that's always what you need for the juices to flow, the animal spirits to spark up again, is lower rates. And we know that the RBA kept rates lower than they should have during the inflationary times because they were so worried about the property market in Australia because it's just so much debt. They didn't want to rock the boat. So the RBA is very focused on the property market.
Interesting thing to me too is that, just say for example that what I've just described is true, like they want to prop up employment and the domestic economy, so they slash rates. That historically can drive asset markets like the share market and the property market higher and higher because of that. So they're trying to fight this fire over here and it causes things to bubble up somewhere else. So I think it's part of the bullish case for the Aussie stock market, and small caps, which is my area, have been suppressed for the last 3 years, to put it mildly. And it's just setting the stage for the rally to come in. And then as people feel more confident, they're going to start putting more money into the share market. And we can illustrate this through Fat Tail. So in 2023, I tried through a million different ways to say, buy up the market where you can. Absolutely zero interest, none whatsoever. People were just too scared of, and that's what happens with a big grinding bear market, right? But this time around, people are more responsive to what we're saying. So they can see that clearly that the market's bottomed out a few years ago. It's lifted. 2024 was a good year. It wasn't particularly volatile either, right? So that big scary spook that we just had, you didn't really see over 2024. But I think the mindset has now switched to buy the dip. That's my reading of the situation. So interesting to see what happens. But
I'm open to either way. Yeah, I'm not too strong. I think it could sell off from here, but if it doesn't, I'm happy to switch and become bullish.
Oh yeah, look, we could get a sell-off, but I still feel like we're going to wobble our way up further. So see what happens. All right, well, let's go to Belvedere's inbox. So this is our new segment of people writing in, or we source the comments from what's going on. Now, we had Raven. It seemed to be oil, because you did the charting about it could sink lower, which I think it's gone sideways this week, right, oil? Yeah. So Raven said a quarter or 3/4 of Russian oil is at risk with Ukraine drones, as well as USA sanctions on dark fleet tankers. I think he's referring to Iran there. How can there be an oversupply of oil? Any thoughts on that one?
Well, isn't it growth coming under pressure going into the end of the year, and Iran possibly doing a deal, bringing back supply to the market? And if a Ukraine war gets settled, people are thinking about that, is Russia going to bring more of their product to market?
We should say oil is like notoriously difficult to forecast just in general, but I think that's probably a little bit of a wild card to say 3/4 of Russian oil is at risk with Ukraine drones. I think that might be a bit of a stretch. So, yeah. Well, not sure about that one. Then we've got a question of, is there really that much risk to oil if the US producers are under the cost curve and we are most likely seeing a rollover of shale? Does he really want US producers to be shutting down production? So the idea here would be like, if it keeps falling further, then the whole US shale patch is cactus, and then their supply goes.
They'll just shut down production.
Which would bolster the price. So I guess the vibe would be is that we're getting some skepticism that the idea that oil would keep going down. And then we had the other question about the price of oil and USD strength. I wonder what percentage GDP oil is in the US compared to iron ore in Australia. Would it actually be material? That's an interesting one, actually, because I got my contact, Phil, who does the weekly analysis of oil, and he posits these days that previously the deficit remember back in the days when the US was importing lots of oil, that caused the dollar to weaken. But now they produce so much, it causes the US dollar to strengthen. So there is a correlation there. And you were looking at the US dollar again for potential weakness. So
yes, well, I think it's more to do with capital flows of the big sovereign funds and fund managers just allocating a bit less money towards the US and pulling some money out and allocating it to Europe and Japan, and maybe trying to front run Trump if Trump's trying to lower the US dollar to rebalance trade. So if he's going to do that, if there is some Mar-a-Lago accord that's going to weaken the US dollar, why not lower that risk now by adjusting your allocations, lowering the amount of money you're putting into the US and putting a bit of money away. So maybe that's part of the weakness in bonds as well. That's big money flows. And if the US dollar really does continue to sell off and accelerates to the downside, that could accelerate that exodus, which could lead to bonds and stocks falling.
Well, the final one was a question about neo metals. Do you want to bring up the chart there? You're happy to do that?
Well, I think we've only got about 3 people still watching, but let's just go and see what we can find here.
So we talked about Sarah the other week, talking about it could be bottoming out. There seemed to be a suggestion or indications that whole critical metals, the market's beginning to go, okay, well, the price is still weak, but maybe in a year or two, things will be on the improve. Neo metals was a classic. It had a massive run, like they all did.
Yeah, and then they all collapsed.
Really died.
Right. So for me, I'm looking at a log chart on this one, just because it's moved so far from $2 down to 8 cents.
That's a pretty big fall.
Yeah. And just to say, I think it's still too early to get too excited. There's still a lot of people caught in this and hating it. If we look at the long-term trends, here's my long-term trend shifts. You can see there. Right, and so it's still in long-term downtrend. Look at the last time. You could have said here, oh, gee, is it time to buy? And how many years did it still trend down?
So that was what, 2018?
That was 2019. So there's 2 years of just grinding down lower and lower every day until, everyone's just given up the ghost, and then...
If they stay viable,
If they stay viable, exactly. And then maybe the trend will turn up. So for me, it's just too early, and I just think because the trend is so sharp, there's a lot of people caught in it still. So there's still a lot of people here who haven't been able to get out. and they're slowly dumping down here. And every time it rallies, you can see, if we just go up close on that, you can see what I've shown you there. But if we look it up close, you know, whenever it's had any signs of life, like even that's a buy pivot, but you know, it's hit the selling pressure, and then look at that, 1, 2, 3, 4, 5, 6, 7, 8 months of selling pressure. So it's still seeing resistance where you'd expect to see it. And I'd be just wanting to wait.
You've got so much overhead resistance there with all the people that still own and want to get out kind of thing.
And these things just often go like this. They just, you know, everyone just gives up the ghost, and then all of a sudden it goes. But you could be looking at a year or two of just nothing, and it could go under.
Yeah, well,
in that time.
Well, just to say, for it to go, you know, we need to see, like, lithium prices are still falling.
Yeah.
There's just really nothing to drive it up from here. So it could bottom out, but, you know,
But look at the way, look at this. Yeah, look at this. You know, you could have said, oh, it's looking pretty good, but then there's another year of, you know, look terrible. So it's...
Too complicated.
It can keep, and too much risk for me to jump on it now.
Especially, too, like, I mean, look at gold. Like, you've got a strong gold price. You've got the producers out of move, but those, if you wanted to go into that really smaller speculative side, you'd go to gold now rather than neo metals as such. I'd have to check in on their business model, but I think they had multiple angles to their business, so we'd have to check which one they're doing now as well. So anyway, we can keep an eye on it, but yeah, nothing exciting there by the looks. All right, well, let's sum it up. So risk to the downside at the US market. Uranium looking good. You're going to go for it in retirement trader. I'm going to go this month for a cyclical play on the domestic market in Australia with those rate cuts coming down. Importantly, the yield curve going positive, which is a good signal for the markets and credit demand. So lots to see. Now, I wanted to finish on something special this week. As you know, well, you were there, Woods. Our publisher, Woody, actually fought in a boxing bout last week. We went along to watch him have a crack. He's in ripping form, 6-pack. He didn't drink for weeks. He only ate eggs and meat or something. And he won. He did. Yep. It was a great fight, wasn't it?
Yep, smashed him.
I've never been to the boxing either. So that was 10 other fights, a couple of bouts, and some of those guys, they went hard, didn't they? Yeah. It was good. So, well done to Woody. We thought we'd leave you with some footage of his mum. That was recorded. So, we'll see you next week. We hope you found that valuable, and we'll leave you with Woody's mum. Catch up.
Check you later.
What did it feel like to hit that son of a bitch?